Do you know there was a time when OnStar was not? And I worked for EDS, a company that at the time was a wholly owned subsidiary of General Motors, when OnStar was not. And I was offered, as a job, the opportunity to do the costing for the first bid that was made to General Motors to do OnStar, the first proposal that was made to do OnStar. That's fun stuff, at least as far as I'm concerned. Helping introduce this new piece of business to the world. And you're the accountant on it, but still, it doesn't happen without it being justified as being a profitable time. And it turns out I turned down that opportunity because I was 4 months away from starting my PhD, although my work did not know that at the time. And it does turn out that the first time it was suggested to General Motors said no. So that particular effort failed, if you will, but ultimately, clearly, OnStar did happen and is on all GM vehicles today. Questions, comments, concerns, random thoughts? It's really, the technology is kind of cool and it can be used for a lot of stuff because they put a chip somewhere in a very inconvenient place to have it removed, like in the chassis of the vehicle. It should be constructed in such a way that you have to all but destroy the car to remove it. And why is that useful?
If you get an accident.
Well, for one, to prevent stealing, right? To prevent it from being, because it can be tracked. But yes, it can also be used if you're in an accident. It can sense when you're in an accident and report that. It can even be used for some accounting functions, like inventory. Makes inventory tracking much easier. Having, as soon as you got the chassis with the chip in it, you can track it through a factory. It just makes even accounting tasks that much easier. No less, not that the other functionalities aren't important, because they clearly are. Being able to, get you rescued when you're out in the middle of Timbuktu with a non-functioning vehicle, very important. But it can be used to make accountants' lives easier as well. So far, so good. So now we're going to review a little bit. And so about debits and credits. And so for those of you who may not have had accounting in a little while, we're going to review a few of the things that are kind of helpful, core, foundational. Who was Mr. Debits and Credits? What is your name? TJ, your card's even up. This is perfect. TJ, what's a debit?
That's an entry into the left side of a T account.
Very good. And the left side of a T account is a debit. Okay? The left side of a T account is a debit. So Matthew Hutchinson. Where's Matthew? Hello, sir. What's a credit? The right side of a T account. That was pretty easy given the kind of port and it's the port and starboard of accounting. Debits and credits. Very good. It's funny though, I remember that from the first day of the first accounting class that I ever took. What's a debit, what's a credit? He defined it and rolled on from there. But you'd be surprised at how many, we won't do it, I won't do it here, but you'd be surprised. I would guess half to 3/4 of the people in the room would not have answered that question correctly upon first prompting. Because they would have tried to funnel it into, well, that's how you increase what kind of an account, Tony? With a debit. You can increase what kind of an account with a debit? Tony, you're TJ Tony. What were you going to say, Tony? Assets. There are 5 types of accounts in the world. Let's kind of talk about those. One is asset. What's another, Heidi? A liability. Adam, what's a third? Where's Adam Blood?
There's the contract accounts used to close out.
Yeah, those we're not going to get into, per se. But what else is on the balance sheet? Assets, liabilities, and? Stockholders' equity. What is the name for that equation? Brett? Yeah, assets equal liabilities plus owner's equity. Where's Brett King? What's the name of that That is the accounting equation. And I always show this to principals and managerial students, but there might be somebody in here who might find this helpful. How do you increase an asset account? Debit. How do you increase liability and owner's equity accounts? With credit. Okay. Which balance? Which income? Oh, good heavens! Which financial statement does that equation describe?
The
The balance sheet. Very good, very good, very good. Kind of feel like I'm jumping around just a little bit, but we'll get back to this. So this is the balance sheet, okay? And let's finish off our list. What are the other two types of accounts that we are missing? Aubrey? What's the very top number on an income statement? The very first one. It's been a while. Do you remember the bottom number? No, it wouldn't be the bottom number, though. The bottom number would not be a correct answer to this question. I'm trying. Do you remember? You remember? Revenues. And then what's the other one? Expenses. Revenues and expenses. And so which, Tyler, are you Tyler? Where's Tyler Warren? Tyler. You just answered, though. Are you Josh?
I am Josh.
Josh, which financial statement do revenues and expenses fit into and kind of define?
The income statement.
The income statement. So here we have two of our most important financial statements, kind of defining the 5 most important categories of accounts. Okay? So balance sheet has assets, liabilities, owner's equity, in the accounting equation. Income statement has revenues minus expenses. And there we have all 5 types of accounts. Mr. Evans, Jim Evans, can you name a financial statement, please? We're going to name all 4 financial statements, and they're all 4 fair game.
income statement.
Income statement, it goes for the easy ones, which is he's a smart man. Jackie? Balance sheet. Alex, are you Alex? Statement of cash flows. Denise, what's the last one? Statement of retained earnings. Those are the 4. So income statement, balance sheet, statement of cash flows, statement of retained earnings. Those are the 4 financial statements in the world. Let's talk about I've made it a lot easier to answer this question. How do you increase a liability account? Danielle? With a credit, exactly right. How do you increase a revenue account? Carrie?
You increase the revenue account,
Yes,
debit it, credit it,
it's one of the 2.
it's credit,
Credit?
credit.
Okay. I mean, if this is rusty, and I suspect there are a few people, make sure you write this sort of stuff down. Because this is kind of foundational, this is the ABCs of accounting that we're covering today. So yes, it is increase revenue with a credit. Angie, how do you increase an expense account?
With a debit.
With a debit. Okay. What else do I want to ask? Let's ask this.